Good morning, everyone, and welcome to another edition of Bleeding Crypto's Market Update. Today is Monday, September 16th, 8:08 a.m. local time. I hope you're having a good day, morning, or afternoon, depending on where you are in the world. Let me start off by giving my disclaimer. I am not a financial advisor, and this is not financial advice. This is to be used for your fantasy paper trading only. All right, guys. So let's take a look. So we're going to leave off where we're going to start where we left off on Monday. So Monday stream, I think it was Saturday. Saturday stream, we ended right in here. And I was talking about that I was hoping that we'd have a continuation or a scam pump weekend. If that was the case, we would have been in between this resistance and this resistance inside of here by Monday. And guess what? It is Monday, 8 o'clock in the morning, and we are here. So we did not continue on the scam pump weekend. As a matter of fact, the scam pump weekend was very short-lived because this is Friday, but the scam pump weekends don't start in the morning. This is the morning. This is a 6 o'clock in the morning candle. The scam pump weekends, like I said before, start at 1 o'clock in the afternoon, which is when New York closes, and the technical end of the scam pump weekend is Monday when they open at 9:30 in the morning, which is 6:30. Excuse me. It's 6:30 in the morning my time. We didn't get that. If you look at the timestamps here for Friday, this is the 1 o'clock right here. So we didn't get all other than what, maybe 1.5%. And we just consolidated here over the weekend. So we didn't get our scam. I won't consider this a scam pump weekend. This is just nothing but consolidation. So we didn't get it, and we dropped. Now we had this here as a possibility on the lower time frames of the continuation rule to drop from this move here, bounce off of this for a get a higher low, and then bounce for a higher high. And then this bounce may get us into this area here. Again, we didn't do it. So while we're on the video, I need to delete these here. And I want to go over some things that I just went over. I just got off of a 1.5 hour call with my Discord team, and we look at some macro views. So I'm going to give you some of the cliff notes from that discussion, so that we can look at those as a potential areas, some potential targets for today. So what I'm going to do here is, whenever the continuation rule invalidates. Now, what invalidates a continuation rule? When you have a clean open and close like this candle here below 0.50. So once it opens here and it closes, this invalidates it. So I'm forced to turn this into a consolidation rule. Now, this consolidation rule, the difference is that on a continuation rule, we normally bounce off of there and we continue to go higher into those higher highs. Here, we tend to consolidate and stay longer. Not that it has to go up, but we tend to stay here a bit longer. So that now is what I may be looking for on the lower time frames, and see if we can regain that. Another thing that I'm looking for is this purple line here. This purple line, it was strong resistance, support. We fell. No back test. So for right now, I am looking for a back test in here. So when I look for back test, I try to assemble a set of data points that can validate that can back that up. And one of the things that I like to use is the DCT trading heat map. So this heat map, looking back just a few hours, look at this, 58070. 58070. So I'm going to put this on the chart. 58070. Give me 1 second, guys. 58070. 58070. This is going to be DCT Heat, and I'm going to put this in yellow so that it could basically give us distinguish that this isn't a support line or resistance line, but an actual heat line. Give me 1 second. I'm going to pause it for just a second. Sorry about that, guys. I had to pause the video. Okay, so now we have the DCT Heat here that is going to give us Just some data points on reasons why we would go a little bit higher besides the normal. I mean, you know the probability, guys. I show you guys that all the time. The probabilities of back tests are really high, but I like having confluence. I don't like to depend on just one data point, no matter how accurate it is. I don't like that. I want to be able to come up with more reasons. So that's one of them there. Now what I want to look at is, are there any individual contracts in that $58,000 or higher that may cause the price to gravitate even higher than that in the event that we want to flip this back into support? So what I'm going to do here, I'm going to go to high block and look at these contracts. Wow. Let me just run this again. I want to get the current data. See if anything has popped up. All right, perfect. And get the current data there. And then I'm going to just do this, go into the local time. So all I want is these local contracts. Okay, now we're talking. Now we have these big individual contracts. These are all 100x contracts. So look at this one here. 35 million 100x, 31 million, 53 million, 77 million, 43 million, 74 million, 99 million. This $99 million one is the one that I would want to, instead of putting all of these contracts, because it's such a large number, and obviously getting here would take out like what these $500 million in contracts. I'm going to put that one alone on my chart, and that'll give us at least, and again, an idea for that pull of going up into that back test for that purple line. So 58,287, 58,287, 58,287, 58,287. Okay, and this is I'm going to put this for $100 million, 99 point something, 100 million, 100 mil, 100x contract. Where does that put us now? Okay, so now that's putting us closer again. We're now starting to build a story why we could find some confluence for the price action to come back here and back test this purple line. Now, this purple line is going to be real crucial, in my opinion, that we're going to reject or we're going to climb above it. If we're going to reject here, then in my case, I am underwater on a Bitcoin trade that I'm in, but I don't want to get out of it yet. We haven't back tested this yet, and I rely on back tests so much that for me, I much rather take the risk. Everything around trading always has a risk involved, and I'm fully aware of it. I fully accept it. I have to accept it on my wins, so I have to accept it on my losses. I told you this many times. I don't have a perfect success rate on trades. Absolutely not. If you're looking for that, do not follow me, because you're not going to have that. But I don't react immediately, because I understand some of the points that are going to happen. So I want to wait for this to give me that confirmation that we are going to go lower. If we are going to go lower, guess what? I'll take my licks and I'll go and I'll short, and I'll make up that. And my intention to short isn't to make up the money, because that's the worst thing you should do, is try to re-range trade. It's more of the fact that I don't mind taking losses, because in the next couple of trades, maybe it might not be the next one, but maybe the one after that one, I'll eventually get that money back. As long as you have more successful trades than losers with your system, that's all you can ask for. So at the moment, I'm waiting for this to hit. Looking for these just reinforces, doesn't guarantee, but just reinforces the probability that we're going to come back into this area here, and then we'll find out what the status is. Now, this is for the lower time frames. What I want to show you is what I went through with my Discord on the higher time frames, on the daily time frames. I think that's going to be really important as well to see. So let me go just give you some of the cliff notes. And the other thing that I actually want to, I'm going to erase this as well. We don't need that. I want to show you the main point of what I saw with my team today that I think is really relevant. I'm going to remove these lower time frames, lower high rules. We don't need them. I don't want to crowd my chart any more than I have to. And we'll leave this here. But this is mainly what I wanted to show you guys. Let me do this here. Let me show you this. You take the right here on a, let me get this in here, right there, perfect. So I want to show you this here. This is very relevant, and I'm going to go this, and we're going to do this. Shoot that over. Okay, so on the macro view, on the daily view, we had a bounce from here. We put in this high, and then we put in this higher low. Now, what I want to see, same thing here. On this here to this previous higher low, can we get that? Can we get a higher low? Oops. Oops, there we go. Okay, so we're right here. So we are currently underneath that. However, one of the things that I look at when I look at the higher low as well is when I look for a completion of that, we tend to go down to 618 into the consolidation rule after harmonic completion. Not always, but if we did, and look at here, here, and here, you can see how close we got to that completion. So this gives me a little bit of a leeway of expectation in the market. So now that I know that we completed the harmonic pattern, I'm going to put my consolidation rule on. Oh, look! Wow, we came close to it. Well, actually, for me, we hit it. When I measure these lines, guys, is really important. You see this halfway line? Just put this imaginary halfway line between the 618 and 706. If it hits the halfway line or below, it's 706. 706 is 786. If it hits the halfway line or below, it's 786. So you can imagine the one above here is 0.50. We got this close, we've hit it. So we can say that we bounced off of here, but I am not expecting a bounce off this. That's the thing. This is called a consolidation rule for a reason. Most of the time, when we hit this, we're going to consolidate before our next move. Now, we got an initial bounce. There's nothing wrong with that. But that's not what I typically look for. So it's not playing the typical, could it bounce and go higher? Yes, it could, but it wouldn't be the norm. And if it happens, then it happens. But at least it did hit a validating level. But I'm not expecting this to happen. So what could happen? What are some of the things that I'd be looking at based on market structure and experience? Here's one of them. We come up here. We knock out that DCT heat. We knock out all those $500 million of small contracts, 100x contracts that I showed you on the high block data, and the last one being right up in here. We get right up into that purple line, back tested on the lower time frames, and guess what happens? We come back down here. That would make sense because this is a consolidation roll. This doesn't just bounce off of there like a continuation roll. So if we can do that, look what that does. Look what that does. Oh, come on. What does this do, guys? You tell me. If we go here, we bounce here and we reject and we come back here, what does that do? You see? A W? You see the difference? And let me just done here. All right, so that could be one possibility. Another possibility is that we reject here and we go all the way back down and we start knocking down some of these liquidity here, or we put in a lower low. If you look at the macro here, and we take this swing low to this swing high. On this latest bounce, look what we did. Look what we did off that bounce. Remember, when we bounce like this, we have two things that we're looking at. When we have a bounce on a macro view here, okay, you're either going to put a lower high, or you are starting to build momentum for a higher high. We don't know that. So we have a high, we have a swing high and a swing low. We came right into the lower high rule. We rejected, but we're also putting in higher highs and higher lows here. So which one of these is valid? On this range right here, we've got to get above here and establish another higher high to validate the uptrend of this low, high, higher low, higher high, possible higher low, and then another higher high. Close up here, we invalidate this, and we continue to move up. Here we were doing it, and look what we did. We rolled back over. So we roll back over. So what happens? We got to start all over again. That's our job. That's our job. We were following it nicely. Everything was working out, and we rolled over again. I'm not surprised because I've been telling you this like a broken record for 6 going on 7 weeks. My target of 51,500 has a 90% probability strike rate. That area, that indicator that I use, has that high of a strike rate. There's a 10% chance we don't. And I understand that as well. So when I see a failure of a move like this, of a continuation, I see a failure, once again, it doesn't surprise me when I have that magnet down there. Now, I don't consider this a failure because we are still within that uptrend. We haven't invalidated that uptrend. The way we invalidate this uptrend here is going to be this previous higher low. If we close below this previous higher low, that invalidates this move and starts to validate this even more. And the technical validation of this higher low is going to be a lower low, because we could actually come down here and not break the swing low, and this would still be a higher low, but it's not a very strong, not higher low, lower high. It's just not a very strong one. It's still a downtrend, but it's not a confirmed downtrend. To me, a confirmed downtrend is putting in a new lower low. It doesn't take away that this is a lower high. It just, again, it doesn't give me that confidence that things are looking really strong or really weak. So we come down in here and we can't break this. Yeah, it's not looking strong, but it's not looking weak because we couldn't confirm a lower low. So again, guys, you have to. It's hard for you guys to think that way if you have a bias. If you have a bias and you need it to go up or you need it to go down to fit your bias, it's hard for you to really be neutral and allow the market to dictate what you're actually seeing in the market, because you can easily twist things around to fit your bias. It's very easy to do that. And often that's what people do. They'll twist the price action to fit that bias. And it really only harms you and at the end of the day, because if you're using that analysis to then put on your trader hat, how are you going to be fair to your trader hat if you are not analyzing the market in a non-biased way? It's going to hurt you. Financially, it's going to hurt you. So for right now, guys, the only thing that I believe that we need to do is wait to see how this resolves today. One of the things that we noticed on my morning brief video is this, and I'm really bullish about this. Look at this. Was it on this one? Oh, I think it was on. No, it was on a different. It was on an altcoin. Never mind. I just got confused with an altcoin. Well, anyways, the only thing positive I do see right now. Look at the CMF. Look at the CMF. Okay. Look at this here. You see all of this drawdown, and yet we're going higher in the CMF. So that's a bull divergence. That right there is a bull divergence. As money is flowing in, price is going down. The price action here is going down, but yet money is flowing in. This is a bull divergence. So you want to, again, not flip bear that easily. Flip bear when everything starts to point down. When there is no bull divergences and all the oscillators are going down, you got bear crosses, and there's nothing supporting any type of possible bullish momentum. But when you have chalk and money flow moving up and you have price action going down, that's generally a pretty good sign that things may turn around fairly soon. So you just want to, and then we have data here that we bounced off of that we're looking for. We have a possible move to the upside to flip this. Let me go to the. We have possible data that can get us up into here that may flip us back into support. And if we regain this, then yeah, we can start moving back up. It doesn't look all that great. These EMAs and these lower time frames, they don't look all that great. But these can easily change. These are hourly EMAs. They pivot much quicker than some of the higher time frame EMAs. And on the hourly time frame, these EMAs are not looking that great. Look, they don't have. If you look at them from here, they're all sloping down. The 200 EMA, the 200 EMA, simple moving average, has started to curve here, but we're still putting in that market structure from this move here, this low, high, higher low, higher high. Again, give it a chance. Don't be so quick to discount the fact that we could go higher. Now, I always have to give both scenarios, both the bears and the bulls. And here's another scenario on a macro view. I gave you the hourly time frame off this purple line, a possibility of rejecting from here and going down and putting in a W. But if we do that, okay, if we do, and we do go higher, we're now coming up against another very, very possible bearish market structure. Let me show it to you. Down into the $51,500 target. See this rejection off the medium line once again? If we manage to climb up here and hit this line and put this and confirm this double top again, and this, the fact that I have that indicator 51,500 keeps me grounded for all of these moves to know that at any time we have that 90% probability of going down there until, like I told you last week, until we can close above this channel that's been a strong, let me get rid of this here. That's been a strong area of rejection for 5 months. Until we get above that and we invalidate that bear trend from that channel, I cannot think that my 51,500 is invalidated. So all of these moves, no matter how positive they may seem at the time, they all have in the back of my mind a possible setup for that move down. So I'm not trying to be negative by looking at this and saying, this has to come down as an M top. But if it's going to fit my probability factor down here, then I'm going to look for that first before I think of a higher high. Before I think of a higher high, I'm thinking of a double top because I know the probability factor. If I didn't have that there, I'd be leaning a lot more towards a higher high. But because I have that, I'm looking more as a double top. So do we double top into FOMOC? Do we start pushing up into FOMOC and double top here and FOMOC comes down? And does FOMOC even create a pivot? I don't know that. That's getting way too ahead of myself. So for right now, let's go to the lower time frames. Stick to these 4-hour time frames. Right now, can we regain the 50 EMA? Look at that. 50 EMA lines up perfect with the purple line. So there it is. Can we regain the 50 EMA? If we cannot regain the 50 EMA, yeah, guess what? Consolidation rule. And what does that do? That puts us into a W in those lower time frames that we talked about. Come back down, go up in here, come back down here, maybe put a W for, not for the lower time frames. We're talking about in here. If we can do that and put a W inside of these time frames, go up here, come back down, and then set us up, that would be great. If we can, but again, I don't know. So let's watch the lower time frames. And I guess the assignment for you guys today is just pay attention to this. Pay attention to the DCT Heat and this high block individual contract that encompasses, if it gets up here, we knew they took out close to 500 million in local contract liquidation contracts. All right, if we hit here. And then that is where the 50 EMA is. So that's all you have to look for today. Do we get above the 50 EMA and above this purple line to regain that support? Or if we start rejecting it and we start consolidating under here, do we put in the right side of that M? The right side of that W, excuse me. The right side of that W. So I don't know what's going to happen. We need the price to validate that. And remember, the market structure is just, look, it's this. This is what we're looking for. This here. And the way you measure the inside of an M or of a W is going to be by using actually coincidentally the continuation rule. When you do an inside of a M or you do the inside of a W, it shouldn't go past the 50%. It should be within 382 or 0.50. So, which means that if you want to crowd your chart and you want to do this, you can. It's up to you. It's up to you. Boom. So in here. So for an M, we want to see this, for a W, excuse me, we want to see this come up in here. No higher than this. And if we can go up in here and still come down. So if we reclaim this, don't get too happy because we could just go up to here and come right back down here. And when we reclaim something, it's got to look like this. It's got to look like this. So meaning that you got to get up here and you got to stay here. You got to consolidate. Now you got to consolidate above, not below. All right. Just the way, let me show you this here. Give me 1 second. Here, here, here. Look at the M top. Look at the M top. See how we hit the 382? We formed that M top. We came back up. We put the double top and we came down. Now look at this double top here. See this double top here? This is what I'm talking about on the daily time frame that we have the potential of doing. Right here. There it is, right there. There's the left side. There's the inside of that M. And this is what I'm afraid. This is what I'm afraid that we hit there. Okay? I'm hoping we don't, but there's always that possibility. It'd be nice to get it higher. I would nice to get up a little bit higher, but that 51,500 continues to tug on my inner voice, and it says, "Hey, don't get too excited about higher targets. We know we're going to go here. So the sooner we get it over with, and the sooner we do it towards October, the probability is that in October, November, we're going to run. We are going to run. The probability in September was that we're going to drop, and that's what we did because the historical data showed us that. Historical data means something, guys. Don't ignore it. It's funny how there was so many posts. Oh, no, it doesn't have to happen. It could easily go up. Yeah, you're right. It can. But history says it doesn't normally do. And look, it's exactly what happened. Now, the other way around is October. Usually we go up. But you cannot rely on it because there are some couple of months in the past 14 years that it did drop. Just a couple of months, but it could be a third month. But typically we want to go with the probability, and the probability is that we're going to go up. So the probability that we're going to go up. I really want to see this $51,500 get knocked out. Just to give me my personal. It doesn't have to do anything for you, but for me, it cleans up the charts, and I like clean charts. I don't like charts that have unfilled objectives because very often, more often than not, those unfilled objectives, they get filled. And it kills the momentum. I don't want to go up here and not fill in that 51,500 because I know that the probability is going to, again, we're going to dump. I don't want to dump from here. I'd rather dump from here. I'd rather continue to dump from here and get that over with. I don't want to do it from up here. It's a massive, massive move. That's really going to shake up a lot. And that's kind of the purpose of what market makers do. The purpose that they're here, right? Is all the big, huge shakeouts. So for the market makers, it'd be great. It'd be great because the amount of money that they would make, it reinforces this market. If you had a business and the business wasn't making money, would you really pay attention to it? You'd probably just let it go, right? Close up shop. But if it's making you a ton of money, you're going to continue that business. So those big moves, we may not like it. They love it. And we should secretly love it because it makes them a lot of money, which means that this market is going to gain more and more and more interest. Do you think they open ETFs? Do you think these huge institutions open ETFs because this market doesn't have potential? It's boring. It stays flat? No. They did it because of the demand, the opportunity, the volatility. They understand that that is what is needed to make money in their business. So don't be so hard on these moves thinking, it's over. No, it's not. It's a normal day in this in this market class, which is why you're in it. So why most people go into crypto and not stocks for that exact volatility. So you got to love the good with the bad, and you got to learn how to turn that what you think is bad into good, into opportunity. How is that an opportunity? If you know that this has a 100% success rate. This top of this line has had 100% success rate shorting it. Here. So 100%. So keep the streak. Go with the trend until it invalidates. 100% success rate that you can short from. So that's a great opportunity. So if we never come and clean up that objective to the downside, great. I got an area with 100% success rate that it's going to drop. And if it is finally that one time that it doesn't, and it's going to confirm, that means new all-time highs. That's going to break that streak. It's going to start creating that bull breakout on a higher time frame, on the monthly and weekly levels. And now we're back to all that. So it's all about perspective, guys. Are you getting in front of the market to maintain your perspective positive so that you're taking opportunity? Because a positive outlook on the market is what's going to give you the confidence to be successful. Because, and listen to what I said, a positive, when something drops, that's not negative. That's positive if you're planning for it. That's positive if you're looking at the data and the data's telling you it's going down, and you go and you do play it down and it plays out. That's positive because you read it correctly. It didn't scare you, and you turned it into an opportunity. People shouldn't look at down moves as something negative. They should look at it as an opportunity to get in front of it. And there's plenty of data that should not catch anyone by surprise. No one can say, oh, we didn't see that coming. 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 Really? So if we hit here and it drops and you say, oh, I can't believe I didn't catch it, then you don't know what you're doing. If we hit here and we drop and you don't catch that, you don't know what you're doing. You need more time to learn. And it takes a lot of time. It takes some people longer than others. That's just the way it is. All right, guys, I'm gonna end it here. And you guys know what to do. Lower time frames. Only thing you have to worry about is this purple line. Let's look in here. Let's go to the hour real quick. Right here. That's all you need to worry about is this line here. Actually, I like the 4 hour better. The 4 hour 50 EMA. That's it. Just pay attention to that. And tomorrow, let's see where we're at. I'll talk to you guys later and have a great day.